Today, Herbert at Brighter at Herbert had Pierre Farragu on his channel. And there was several very important takeaways from that show. Let me go through them. First of all, he clearly agreed with Jeff Lutz that there is a substantially more cost of goods drop coming in 2024. In other words, there's going to be continued savings across all those things that Jeff and I talked about the other day, that Larry and I talked about on Friday night, that I brought up this morning when I went through my expectations in terms of the profits for 2024. He agreed with my statement that the battery has substantial amounts of cost coming out years into the future, not just this year, but for years into the future. He also felt that the 2024 Tesla, that in 2024, Tesla will not decrease car prices faster than the cost of goods, so margins will, in fact, increase this year. Number two, he ultimately concludes that Tesla will beat the street in 2024 with earnings of $5 a share rather than the $4 at the current street, and that the current PE is about 50. And if you keep the PE at 50 with $5 of earnings, then you would have $250 for the year, a $250 price point for the year. Now, that's his current expectation for this year is 250. That'd be a fine gain for the year, but I don't think that's where we're going to end up, of course. And if you look at my video from this morning, you'll see where I come up. Anyway, he said nothing about the IRA, for instance. And I say that that's another $2 billion right there, which it would be about 65 cents of additional earnings. But he also gives no option value to FSD, Robotaxi, or Optimus. He makes it very clear that this is all about the existing products, so the cars, the energy, and the services. He doesn't expect FSD to our Generation 3 or Optimus to contribute anything material until 2026 or 2027. And he really doesn't think that Robotaxi is ever going to be a deal. Okay, a significant deal. He thinks that's not going to be significant. He goes into the details on that. All right, number three. He has a 2030 expectation of the car business being worth $2 billion. I'm sorry, $2 trillion, and energy another $2 trillion. So he's got a market value for Tesla in 2030 of $4 trillion without Optimus and without FSD. So you can, although his valuation of the car business kind of includes FSD. So maybe it would be fairer to say that the 2 trillion and 2 trillion would not include Optimus. So 4 trillion plus Optimus, which of course some people are saying is worth 10 trillion all by itself. Number four, he also doesn't expect Robotaxi to be a big deal. I said that before. All right, number five, he thinks Gen 3 will take until the end of the decade to be in the millions of units. He believes Mexico will not begin to ramp until Austin is 100% dialed in and through any potential production hell. So he's looking at 2025 as when they start breaking ground in Mexico. So then it'd be like 2027 before they start making them. So he's looking for a very long and slow ramp on the Gen 3 vehicle. I think that is nonsense. I think that's not going to happen. Okay, number six, he basically believes that Tesla is so far ahead of the competition in hardware, software, manufacturing, and tech that it won't matter if it takes longer to get FSD and the Gen 3 done. All right, this is Randy Kirk. Please hit like, hit subscribe, hit notify. Listen, I did that 2024 earnings estimate earlier today. It has 4 potential levels of the earnings, from a super bear case, then a bear case, then a base case, and then a bull case. I got a lot of very nice comments from that, but not a lot of people saw it. If you didn't see it yet, highly recommend you go back and take a look. I'll leave a card later, or you can just, of course, always go into the channel and look it up and go back and take a look. And then we also show as the super bear case is Troy Teslaike's expectations of only 2,070,000 units, which I think is a very, very low number. Anyway, it's all spelled out. We will have Brian White, of course, around noon tomorrow. We'll have Larry Goldberg at 4 o'clock or so California time tomorrow. So please hit notify so you make sure you hear about all that as we go through the day. The American Trucking Association's advanced seasonality. I'm sorry, let me do that again. The American Trucking Association Their advanced seasonally adjusted for higher truck tonnage index increased 2.1% in December, but that's after it fell 1.4 in November. In December, the index equals 115.7, and where 2015 was 100, so not good, compared with 113.3 in November. So as you know, I always talk about trucking on this show. Nobody else talks about trucking. I see trucking as being a canary in the coal mine. Good evidence. If trucking is doing well, the economy generally does well, especially on the product side. And we know that the product side has not been doing well. It's been on the services side where all the activity has been. So yes, that's a good thing to see them having a bump in December, but overall, it's not been good. The American Trucking Association's advanced seasonally adjusted, whoa, what happened there? While 2023 ended on a better note, truck tonnage remained in a recession as it continued to fall on a year-over-year basis, said their chief economist, Bob Costello. With that said, for higher contract freight, which is what compares our index in December, was 2.6 above the trough for April. For the entire year, tonnage contracted 1.7% from 2022 levels. This makes 2023 the worst annual reading since 2020, when the index fell 4%. There you go. So November's decline was revised slightly down from their previous press release. All right, compared with December 2022, the SA index fell 0.5%, which is the 10th straight year-over-year decrease, although the smallest in a while. All right. The final thing they say is the not seasonally adjusted index, which represents the change in tonnage actually hauled by the fleets before any seasonal adjustment, equaled 110.7% in December, 1.9% below the November level of 112. All right. Listen, here's what's coming up this coming week. We have got on Monday, nothing. We got Tuesday, the S&P Case-Shiller Home Price Index comes out at 9, so I'll be reporting on that in the evening. And then we have got the, which by the way, that's a home price index. They don't have an estimate on that. I'm going to say probably up again because there's been a lot of activity because of mortgages coming down. Last month, it was up 4.9%. We've got the job openings number coming out at 10 o'clock, which which is a big deal. This is another one of those things that the Fed looks at. It's going to come out on Tuesday before they make their decision on Wednesday. Right now, they're not giving you anything to go on here. Last month, it was down to 8.8 million job openings. If that drops substantially, that would be one more reason the Fed could look at to maybe make the right decision on Wednesday, which is pretty darn unlikely. Consumer confidence last month was 110.7. The folks that were polled said they think it'll come in at 115 this month, with consumer confidence, jumping up quite a bit. It's possible, but and I've heard some other reports that would indicate that people are seeing consumer confidence up, but I'm not sure it's going to jump that much. All right, we've got Wednesday. ADP employment comes out. Last month, 164,000 added. This month, the polling says 140,000 added. Remember that the ADP employment is not nearly as important as the employment numbers on Friday, but people do look at them, and a couple of 3 months ago, it really impacted the stock market. I don't have any clue on this because this is actual employment numbers. It's really, really hard to know. Employment cost index, they're saying is going to be up 1%. That's for the month, which would be a very high rate. Last month, it was up 1.1%. We do not want to see this showing a month over month of 1%. That would be bad. Then we've got the Chicago Business Barometer. Let me go back on that and say on the employment cost index, this looks like it's quarterly. I'm not 100% sure on this. But we'll look at it when it comes out, make sure that we know exactly if it's a quarterly number, is it an annual number? Because if it's a quarterly number of 1%, that would not be that bad. The Fed would like to see it at 3% annually, but 4% annually wouldn't probably cause a lot of concern. Then that morning, later in the morning, we've got the Chicago Business Barometer, which is another purchasing managers index. That's also expected to be up nicely from 46.9 to 48.1. And then finally, on Wednesday at 2 o'clock, we have the Fed interest rate decision. And it doesn't say in and I went looking everywhere for this so I could report it to you. Nowhere does it say if Chairman Powell is speaking on that Wednesday at 2 o'clock, but he always does, right? So I think he does. But I'll keep searching and let you know if I find out more tomorrow morning. All right, then we got Thursday, initial jobless claims, which has been right in that 200, well, it was like 180, then it's last week 214. They're saying they think it'll be around 210. Any of those numbers, anything in that range, I'm sure will be fine with the Fed. U.S. productivity comes out next, one of my favorites. I can't wait to see this number. You may remember that last quarter, it was 5.2% increase in productivity year over year. The polled individuals said they think it'll only be 2.1. I think this will be a big miss on the part of those who are polled. I think this will continue to show a very big number as the overall economy is becoming more productive because we no longer have all these strains that we were having. Also with ChatGPT and everything happening, I think we're going to see better than a 2.1. Now, by the way, 2.1 would be good, but I think we're going to see a higher. We'll see how good I am at predicting that. And then we've got later in the morning on Thursday, we've got the S&P U.S. Manufacturing Purchasing Managers Index. That would be the final number. So this is reported 3 times, and there's no suggestion here. It was on the second round, it was at 50.3. And then we've got ISM Manufacturing Index coming in also later in the morning. About the same as last time at about 47.2 is what they're saying it'll be. All right, finally on Friday, we have the biggest thing of the week. The Fed, I'm not sure it's going to be that big a deal because I don't think we're going to get a surprise. I don't think they're going to lower rates. I know they're not going to raise rates. So, and maybe will the language, suggest a little dovishness? Will it point towards a possible cut in March? I don't know, but we'll see what happens on Wednesday. Anyway, on Friday, we have the U.S. non-farm payrolls, of course. That is suggested it's going to come in at 180,000 compared to last month, 216,000. That would probably be a good number for the Fed. U.S. unemployment rate coming in, they think at 3.8, so popping up a little from 3.7. I think 3.8 was what it was the month before. The U.S. hourly wages going up by 0.3%, down from 0.4% the last month. That would still be a little hot for the Fed. And then hourly wages year over year, they're not giving us a number. Last month, it was 4.1. Factory orders also come out that morning, and last month it was up 2.6%. This time they're suggesting it will maybe only be up 0.4%. I think that might even be aggressive. And then another consumer sentiment survey, this one they think will be almost identical to the previous month. No real change there from 78.8 to 78.9. Now, we don't know. That may not be what really happens. Now, there's also a bunch of companies reporting this week. They're reporting earnings. This is the biggest week of the earnings season. And we're expecting, of course, 5 of the Magnificent 7 report this week. So we've got, everybody but Tesla and Apple. So Apple doesn't report, Tesla doesn't report. So all the other 5 do report this week. We also have UPS. So that'll give another indication of what's happening with freight. But they do think that UPS they've been having to deal with weak shipping demand, according to this article. Video game developer Electronic Arts comes out this week. We've got, they were having layoffs. Results are due for Pfizer, also Starbucks and Whirlpool, MasterCard. And then, those are some of the ones that are coming out this week, which should be impacting the market. The market wants to see solid earnings. Of course, they always do, but they're also looking for what is the guidance? What are these companies? What are all their economists? We get to hear from all these economists from all these different walks of life. And so we get a general idea of what might be coming up later in the year. So now we want to take a look at the pre-market. And as people think about the Fed and think about the jobs report this week, there's Elon Musk is out on X right now saying they're planning 2 launches of Starlink tonight. So that's pretty interesting, getting 2 off in one night, because one that was supposed to go yesterday didn't go, or maybe that was earlier today. I'm not sure. Okay, and so let's take a look, though, where things are in the pre-market. Oh, by the way, let me also mention this fantastic video. I've only seen half of it so far, but Connecting the Dots did a really nice video on the robots. Maybe I'll report on that a little bit more later because it's fun. It's a fun video. I'm not sure there's a tremendous. I've only watched half, so I shouldn't say that there's not much to learn, but it's quite interesting and well done, as his stuff always is. All right, so now let's go ahead and look at what we are seeing in the pre-market. And this is going to be a surprise to me. I haven't looked yet myself because I was watching the game, I was watching the game. All right, so we've got the bonds down, the 10-year yields are down almost 2.7 basis points. And we've got the 2-year is also down almost to 1.8 basis points. So it's getting closer and closer now. We are now down to just almost 20 basis points. That's really getting close. We've got, however, the short terms are still going up. They're waiting for the Fed to move. I didn't understand that for a long time, but the Fed is really going to be more controlling of those short-term bonds. All right, then we want to take a look at oil. We got, last time I looked, it was going up again because why? Yeah, you know why. All right, so it's up 34 cents at 78.35. That's still really shockingly in good shape, given it is almost February, given all the things that are happening in the Red Sea, given the fact that China is putting in some stimulus right now. So the need for oil, because China doesn't have very many of their own natural resources. They have to import coal from Australia. They got to get oil from around the world, natural gas, etc. So if they stimulate their economy, this could put more demand on oil. So, but still, at 78.35, I mean, that's really still very close to the range it's been in for a while, which is way down under the 95 that it was earlier. Natural gas continues down, sitting at almost 2.7, which is up a little from where it was last week. Gold is up 7, still sitting around 2024. The dollar is up, but steady. The euro in particular has been down. We have got the Bitcoin. It did recover the other day. You might have noticed that. I don't know if I reported on that yesterday or not. It's sitting at 42,291 now, so it's doing pretty well. Here are the indices. We've got the Dow down 69 or 0.18%. We've got the S&P futures down 475 or 0.1%. And the NASDAQ futures, however, are up slightly, 950 or 0.05%. Actually, just now changed to 10 on the NASDAQ futures. So I would obviously, we have mixed on the indices going into next week, with the NASDAQ being slightly winning, the Dow going down after, a big run up on all three so far this month, with, records all over the place. Of course, we won't get any Tesla information until the morning. All right, so please, you got to do it. You have to go back. I spent a lot of time on this. No, seriously. I believe that you're going to love these earnings estimates and these stock estimates that I've created, because I've done a very conservative one that is based on Troy Tesla's numbers. I have done a next level one, which is just kind of a regular bear market, which is stronger than Troy, but not that much. And then a base case, which may be about what might be expected. But then I got a bull case, which is I think it's based on my 2.35 million number. Yeah, I know that's what it is. And, that would be a decent deal. Still, if you only look at this year, and you don't put on the optionality, then at the very most, I think I came up with $365 as a value for the company based on this year's earnings, not looking at 2025, only looking at 2024. Now I'll do a 2025 later, and we'll look at that and see how that might impact the stock price later this year, which you're probably guessing I think would make a big difference. Okay, so we've got, as always, of course, we have oh, look at that. I forgot all about that. I'll put that in tomorrow morning. We have the regular shows tomorrow morning with, the After the Bell show coming in the morning, and then Brian White later in the afternoon, and then Larry Goldberg at night. And then I'll put the card. I almost forgot. Here is the card for that earnings analysis that I did this morning. All right. And that you want to go back and check that out. It's right there. Okay. Buy a Cybertruck and join Patreon. Cybertruck bottle opener, I mean, and join Patreon. Thanks so much. Hope you had a great football day. Hope your teams won. And it's been great talking to you.